Broadcasting from the Allen B. Levan NSU Broward Center of Innovation at Nova Southeastern University. Welcome to Sunshine Startups Live, featuring rockstar entrepreneurs, bright ideas, and experts on the startup ecosystem. And now your hosts of Sunshine Startups Live, Jim Ryan and John Wensveen.
Hi, and welcome to Sunshine Startups Live. I'm your host, entrepreneur, investor, startup enthusiast, Jim Ryan. Really excited to be broadcasting from the Levan Innovation Center, and exciting to be joined by my co-host, Chief Innovation Officer of the Levan Center, and John Wensveen. Hi, John. How are you?
Well, good morning. It's a pleasure to be here. You got an awfully long title, kind of like mine. I'm going to have to change mine up and shorten a little bit. But welcome to the world's first theme park for entrepreneurs. This is the only model, not only in the United States, but truly the world, that's figuring out how to reverse engineer the success of an entrepreneur from birth of an idea through successful exit or global expansion, all in a 54,000 square foot purpose-built facility with local, regional, national, and international impact. And I'm so excited about our guest here this morning. It's going to be a great conversation.
It is. And the purpose of Sunshine Startups Live is really talking about startups, the ecosystem, and those that help foster the ecosystem. And one of those individuals is joining us today on this exciting podcast is Saxon Baum. He's a partner with Florida Funders, and kind of talking about his background, what's happening in the startup community, the types of companies he's seeing. And Saxon, thank you so much for joining us here on Sunshine Startups Live.
Absolutely, gentlemen. So happy to be here. It's an honor. I heard it's the 5th episode, and I heard it's the best one yet. So I'm just so happy to be here with you guys today, and thanks for that great introduction.
Well, it's lucky number 5, and you won the lottery here. So let me take a step back and kind of walk a little bit through your background and kind of what led you to Florida Funders. So can you kind of share the Saxon story a little bit, and then we'll talk about Florida Funders and some of the work there.
Yeah, absolutely. And once again, thanks for having me, guys. I've always been fascinated with entrepreneurship and investing. It's in my blood. On my mother's side of the family, I have 2 very successful uncles that were technology entrepreneurs, built and sold venture and then private equity-backed companies, well over $1 billion in exits between the 2 of them. And on my father's side, we have all finance individuals. So my father, as well as his brother, are very successful asset managers and have always worked in the public equities realm. And so growing up, I was always surrounded by business. And it really was something that, I always knew whatever I did, I was going to end up either running my own business, investing my own money, investing other people's money, but always being in this sort of startup ecosystem. And that's really where my career has gone. And really our first business that we started, and just like a lot of entrepreneurs, it started out of my garage when I was 13 years old with my best friend growing up in Pittsburgh, Jack Herman. We were early to eBay, and a lot of individuals, specifically of the older generation, didn't know how to work eBay, didn't know how to sell, ship, or really use system. So what we would do is we would go garage to garage, door to door, and we'd offer our services. JHSB eBay is what it was called. And really what we would do is we'd go in somebody's garage and we'd find the things that they would want to sell. We'd take 10% of everything. So we were selling things, we had our own business cards. It was really the first in with the entrepreneurial world. And that was exciting. That was probably from age 13 to 15. After that, I worked in restaurants. And I think, that's something, we can come back to this, but I think working in restaurants is one of those things that every entrepreneur probably has done at some point or should do. You learn customer service, you learn hard work, you learn to give up long nights, and all for the greater good of the kitchen, all for the greater good of the restaurant. It's a real team environment. So probably from the ages of, say, 15 to 18, I was working in restaurants, typically either bussing tables or waiting tables in Pittsburgh. And then what happened to me was I went to school at Miami University of Ohio, not the University of Miami. When I moved down to Florida, everybody thought I went to, the Hurricanes. No, I went to Miami University of Ohio. the real Miami, as some people say up there, was the
So
first
so did
Miami.
my wife, by the way. She's a
Oh,
graduate
there
of the
you
same
go, a fellow
institution.
Red Hawk.
Yeah.
There we go. There we go. And I had a fabulous experience there. It was just such a great time. Met so many great friends and great people, and it helped me start my journey. And really, why that is because growing up in Pittsburgh, we were constantly going to Penguin games and Steelers games and concerts and live events. Well, when you go to school in the middle of Ohio, where everything around you is cornfields, there isn't so much to do outside of your local pub or your local library. So there was this inflection point that I was seeing where I was missing out on live events. And so every now and then we would drive over to Covington, which was just right on the Kentucky side of the border, and we would go to a concert or we'd go to a Bengals game or something. And this was really in about 2013, I'm sorry, 2011, 2012. And we would see individuals at these events with their phones up in the air. And we'd say, okay, this is interesting. Like everybody's taking pictures and videos, they're generating user generated content, but there was nowhere to get that content after the event. Maybe 3 or 4 days later, you could go online and you could get the professional content, but you couldn't get that user generated content. So we started a product called WeView, WEVUE, my junior year going into senior year, which really was a product. It was one of the first sort of cloud-based photo and video sharing platforms. And the goal was to share photos and videos from live events, concerts, sporting events, weddings, anything where there was a group of people, vacations, anything where there's a group of people and they wanted to share pictures in a collective manner. We built a product to do that. So fast forward to 2013, I graduate college. Up to this point, we had really raised no money. We kind of paid for the initial development ourselves. And then we realized that we had something that was fairly special here. And I approached an uncle of mine who actually is the managing partner of Florida Funders, and we'll come back to that as well. And I said, Tom, I think we have something here. Would you want to invest in this business? He said, hey, I think it's interesting. We got the rise of apps. Everybody's downloading an app. You're downloading an app to walk to the bathroom at this point. So yeah, I'm interested. And I'll write the first check, but you have to move down to Tampa, Florida, because I want to be involved in the development of this product. And I said no, that's not going to happen. The only time I've ever been to Tampa is to go to Busch Gardens. All my friends are moving to New York and moving to San Francisco and Los Angeles and going to Chicago. That's just not going to work for me. He goes, well, that check that you wanted, that's not going to work for you either. So unless you move down to Tampa, we're not investing. So lo and behold, about 2 weeks after I graduated from Miami of Ohio, I packed up the car and I moved down to Tampa, Florida. So that was our first check. It came from my uncle, my mentor, Tom Wallace, and then my father and my other uncle also invested alongside. So our first few $100,000 came from them. And we were really off to the races. We built a great consumer-facing product. We were partnering with universities. We were partnering with music venues. We were partnering with sports teams. We had about 50,000 active users on a daily basis. And from, I would say, call it late 2013 up until about 2014. Well, what happened was come late 2014, Snapchat and Instagram came out with location-based posting and hashtags. So immediately we were eaten alive. We really had a product that was okay, in my opinion, but we were early to market. So we had a lot of colleges using it, a lot of fraternities and sororities, a lot of wedding planners. But after Snapchat and Instagram came out location-based posting with their hundreds of millions of users collectively, we really knew that we were in trouble. So we had an option. We either had an option to fold up shop and to, return some of the dollars that we had been invested in us, or we had the option to pivot. And us being entrepreneurs, obviously, optimistic with the technology that we built, we decided to pivot. So we tested several different verticals, and what we realized was the rise of corporate culture in terms of recruiting was simultaneously happening while we were building this product. And what I mean is you had companies like WeWork, you had companies like Apple and Amazon that were showing off how great it was to work at these companies via content that was coming from their offices, the ping pong tables, the beer kegs. This is that rise of, hey, this is a great place to work. This is a fun place to work, and you want to work there. Well, the issue is that this was great for the large tech companies coming out of Silicon Valley. York and maybe some other major cities. But for your average SMB, they were losing employees to these companies because they weren't showing off what it was like to work at their office. Although they might have a great corporate culture, it wasn't getting out there. So what we decided to do was we decided to rebuild some of the technology, create more of a white label private application using the same type of technology that we had already built, that core photo and video sharing. And we decided to pivot into a corporate culture solution that we sold to SMBs so that individuals inside of companies could gather photos and videos around cultural things happening. So things like win notices, things like new employee introductions, things like conferences, things like field days, all these great cultural things that were happening on a day to day. We allowed employees then to gather and take and engage in photo and video via this app that they would be able to then show those photos and videos off on their website via a product that we made that was essentially a drag and drop widget so that any non-technical marketing manager or non-technical website manager could grab the photos and videos that were coming from the employees, show it off on their website, and really use that as a tool for recruiting. And once we started doing that, we really started doing pretty well. Instead of being a free app on the consumer side, this was a paid for app. It was about $15,000 on an annual basis that we were charging, upwards of about, I think our largest contract was about 30,000 in terms of ACV. And we really did that then for another about 3 years. So from about 2.5 years. So about halfway through 2014 until about the end of 2016, beginning of 2017, we ran that product. We had customers like TriBridge in Tampa, Vector Learning, Tech Data. We had some really nice companies local here in the Tampa Bay region, all the way down to some bigger companies in South Florida. And so we ran that product for about another 2.5 years. And that's really where we learned enterprise sales. We learned SaaS metrics. We learned how to truly run a B2B business. I wouldn't say there was an enterprise business. We weren't selling to the Apples and the Googles of the world. We were selling to SMBs, but we really learned enterprise B2B sales. And so, yeah, that's my entrepreneurial journey, which we then ended up selling that company at the beginning of 2017. It was a license deal that we sold to some individuals that left a local company here called Bisque Education. And then they used that business that we sold to them for higher education recruiting. I will say it wasn't very fruitful for me. Some of the investors made a little bit of money back in the license deal, but it was a great experience. And it really set me up for what is my current career. And I don't know, Jim, if you want to ask me a little bit about the prior career before I get into the venture capital world. But yeah, that's my journey in terms of entrepreneur, then turned investor. Amazing experience. At the peak, we had about 20 employees and always ran it out of Tampa, Florida. And really, I know something we're going to talk about today is just the growth of the Florida ecosystem. We were kind of that second gen of entrepreneur in the Tampa area, and now we're on kind of like Gen 3, Gen 4. But it was an amazing experience because when I moved to Tampa, the entrepreneurial ecosystem was virtually non-existent, and I feel like myself and several other players really played a key role in growing that ecosystem to what it is now, which is one of the fastest growing technology ecosystems in the state of Florida and in the country.
Smart pivot, by the way. Nice move.
It's always nice to make money.
Absolutely.
So Tampa, I'm pretty familiar watching the growing ecosystem, and I would say that throughout all of Florida, there's a whole ecosystem that's building around innovation, technology, and entrepreneurship. And it's interesting when you start to map it out. There are definitely hubs and spokes that are now starting to get attached. And I'm somewhat familiar with your role in growing this innovation ecosystem, which is truly having a local, regional, national, international impact, and the lights are truly shining on Florida. So that really brings me into your current role. And since we're on episode 5, let's go with the theme of F today. It's Florida Funders, episode number 5. You're doing a fantastic job. What is your day-to-day job now?
Yeah, absolutely. So after we sold the business, I started with Florida Funders. Florida Funders is an early stage venture capital firm located in Tampa, and we have an office in Miami as well. We have a hybrid investment model. So we are a fund first business. We're investing out of our third fund now, which is going to be a $100 million vehicle. But we also have an investor network. So about 50% of the opportunities that we invest in, we also bring out to our investor network where individual accredited investors can invest alongside of the fund. I've been with the team for well over 6 years now. My role started as the director of business development. It then turned into the vice president of investor relations. I'm now a partner at Florida Funders, but really my core role is investor relations. So I oversee all the fundraising at the firm. I oversee all the investor relations, and then I help the deal team with deal sourcing, as well as I sit on several boards of companies, some that I've sourced, some that I haven't. But really in the verticals of fintech, AI, machine learning, and sports and entertainment. Those are the three verticals that I know very well. So my day to day right now, what is it? It's raising money. We're active currently in terms of our third fund. So we're out there talking to family offices, high net worth individuals, and we're talking to institutional LPs about what we are up to. And really, what we do is we invest in early stage technology companies. I know that's a broad term, so kind of to hone in on that, late pre-seed through early Series A, with our sweet spot being seed. We like to be the first institutional check that is in a company. We are very active. We take a board seat with the majority of companies that we invest in. We like to help out. Most of us are former entrepreneurs. So the more that we can do to be in the car, not in the driver's seat, but to be in the car with our founders and with our portfolio companies, we really think that we add a lot of benefit. Our average check size is about $1 million. That's from the fund. And then we can go out to that investor network and raise anywhere from $500,000 up to, we've done $4.5 million in one deal on that network. So it's an extremely active network. And then the other thing is we are Florida funders. About 70% of our portfolio is Florida. And we can talk about, where we see different technologies in the state of Florida in a little bit, but 70% of the portfolio is Florida. Another 15% is really the Southeast. So cities like Raleigh, Charlotte, Dallas, Austin, Birmingham. And then the final 15 is really scattered across the country. We have some great deals in New York City, Los Angeles, SF, and some other cities kind of sporadically sprinkled in there as well.
So, in full transparency, I've been a member for Florida Funders for about 5 years now, and had some really great success, great platform. So, congratulations, and kudos to you and Tom and the team in Tampa. Really have put together a really substantial network. How many investors? So, when you started and the fund started, how many people did you have in the network today? Kind of where is that number roughly around at this moment?
Yeah, when we started in Florida Funders, it's an interesting story. It actually was started in 2013 as a crowdfunding platform. And then we took over in 2016. So we kind of call it Florida Funders 2.0. When I got involved in 2016, Tom and Mark Blumenthal, my other partner at Florida Funders, they had gotten involved about a year prior. And then really when I got involved is when Tom took over and we really started kind of Florida Funders 2.0. When I started, there was roughly, I would say, 200 investors on the network. There was no fund. It was just a network. There was no hybrid model. We created that hybrid model by raising that first fund. Where we're at now is we have 2,500 investors on the network. And I'd say about a third of those are active, meaning they've made an investment at some point within the last 12 to 18 months is what we say. We were probably about $250,000 in AUM when I started. A few deals were done via the crowdfunding platform that we now call our investor network. We're now well over 150 million assets under management. So we've seen some substantial growth. I mean, when I started, I was the third employee. Now we have about 16 full-time employees, offices in Tampa and Miami. So it's really been a journey, Tim. And obviously, just like any business, we've had our ups and downs. We've had our years of growth. We've had our years of struggle. I'd be remiss to not say that we have been a product of our environment. I believe we do great work. I believe we work very hard as a team. I believe we have a great team. But being in the state of Florida with the growth that the state of Florida has had over the last 3 or so years, we've definitely been able to benefit from that as well, which has been something that's just so exciting. I mean, we could have never imagined what was going to happen in the state of Florida. COVID was a big driver of that. I think, the governor, whether you're political or not, and I'm very modern with my politics, he was a big driver of business being open in the state of Florida. And then I think just good timing and good luck for the state of Florida and really for a lot of groups that have been investing in the state of Florida for a while.
So you talk about your journey of being an entrepreneur turned investor. I would debate that as an investor, you're still an entrepreneur, and it's always in your DNA forevermore. So I'm regularly involved in conversations primarily with early stage startups, and I'm grateful for the fact that Florida Funders is out there and looking for those early stage opportunities versus other investors that may be scared and they want to get on the bandwagon a little bit later down the road when there's more of a proof of concept. So you obviously take some risk, and hopefully it turns into some great success. So I'm often asked from entrepreneurs or wannabe entrepreneurs, how do I get that first check to get me to the next level? And we often talk about a formula that has right money, right people, and right plan. And if everything is right, then you're set up for success. And if one of those things is wrong, then maybe you're set up for failure. Could you give our listening audience your perspective in terms of what right money is? And is it somebody that's investing in me, the entrepreneur, or are they investing in my business idea, or is it something else?
Yeah, no, it's a great question, and really where we come in is we're typically after family and friends, typically after maybe a pre-seed fund has already invested. We like to be that first institutional check. So what we look for is we do look for an MVP, so a minimum viable product. We look for some indication of product market fit. We look for some revenue. I mean, it doesn't need to be millions, although we have done deals with millions in ARR. Our typical deal is probably anywhere from 250,000 to 500,000 in ARR. We'll go a little bit before and we'll go a little bit later, but that's our typical sweet spot. And really, when we're looking early, let's kind of start there. When we're looking early, so maybe that's late pre-seed, early seed, there's only so many financial metrics that you can look at. But really what we're looking for is what's the total addressable market? We're looking at more than anything the team and the founder. We love a second time founder, so somebody that's been successful before or has started a business. Maybe they haven't been extremely successful, but they learned a lot and they had a great run. Maybe they didn't just completely fail and fall flat on their face, but there was something to show for it. We really love to see that. I mean, that's a pretty good indication of that somebody might be successful in the future because they've been there and done that before. We look for the ability to recruit. I think that that's something that's very interesting on a shoestring budget. How do you have that passion? How do you have that drive to be able to recruit the best people around you? One of our founders out of Miami, actually, Joey Levy, the CEO of Better. Better's one of the fastest growing sports technology companies in the country. I think Joey was recruiting some of the best sports minds in the world to his business before they had any revenue at all. And that was all passion. That was all, him coming off as a subject matter expert, him talking about why his business was going to be so successful. So we love to see that as well. One thing that I really do like to say is all your ducks need to be in a row. When you come into a fundraising meeting, when you're talking to an early stage investor, although we're not a private equity investor, we're not looking potentially for EBITDA margins. We're not looking for, your numbers need to be exactly perfect in terms of your growth trajectory. We do want to see a plan. And we want to see a plan that makes sense. We want to see a plan that's achievable. And we want to see a plan that's very thoughtful. And I think that can be done with a great pitch deck. That can be done with great financials and a great financial snapshot. And that is something that we really do look for. Is this realistic? Is there a plan in place that can be achieved? It doesn't have to be achieved exactly, but is it realistic that it can be achieved? And that's something that we really like to see. We really like to see an entrepreneur that is looking for the right minds around the table. Early on, there's a lot of, and you guys see this all the time, there's a lot of people that say, hey, I can help you. I can be an advisor. Some of these individuals have never worked with an early stage company before. Maybe it's somebody that worked in a big corporate company. They're probably not the right person to start out with an early stage entrepreneur. You need somebody that's been in that driver's seat before, that knows how to get scrappy. And I think that that's something that we really have is we really try to get involved, and we have people that have done that before. So it's really a combination of all of those things. You want to stay away from the pie in the sky idea. You want to stay away from when you have some red flags around, like, okay, is this the truth? It's pretty close to the truth, but we need to dig in a little bit more. I mean, there's things that you want to stay away from as an investor, but from an entrepreneur standpoint, it's just all about telling a great story, having a financial snapshot that makes sense, and then surrounding yourself with the right people and being able to recruit effectively.
So Saxon, sort of taking the opposite side of that from the investor perspective. Obviously, venture capital dollars are substantially down this year to date. Florida activity for startups have gone up slightly. So we're obviously staying, at least, looking at metrics that we've had in the past several quarters. Our numbers have maintained or slightly increased. In your role and in the role with Florida funders, you've got two audiences, right? You've got the investors and you've got startups. You've got to get good startups to present. And then obviously you've got to marry them with the investors, and it has to look attractive to the investors. So kind of talk about like today's paradigm with that. So with the investor dollars down, startup activity is still reasonably good. Are you seeing quality companies come through the transom? And then how are you wooing those investors today, where a lot of them are in a sort of a cash conservation mode right now?
Yeah, it's a great question, Jim. And in my 7-year career in venture capital, this is the first market that has looked like this, right? This is the first, call it, down market. Although we have seen a bit of a rebound here in the last few weeks and the last few months. It's a unique market for me because I haven't been in here. So admittedly, I'm still learning. But I think, the big takeaways are the best startups are still getting funded. Venture capital funds are being much more conservative with what they're investing in. And if you actually look at this stat, which is really interesting, the median valuation for angel and seed has actually gone up. And the reason is because investment firms, specifically venture firms, are investing in only the best seed deals that have a little bit of a higher valuation, and they're putting more money into those deals. So the median valuation has actually gone up, although volume is down substantially. So what we're doing, we're just being a little bit more conservative. Instead of maybe investing just in the A minus and A, we're only investing in those A plus companies. And I think that that's what you're seeing across the board. That's why less companies are getting funded. More money it's not more money, I'm sorry. Similar amounts of money are still going into those companies, but the volume in terms of deals is down. And then I think the second question is unique for us because our fund leads every deal. So before our investor network would see any deal, our fund has already done 60, 90, 120 days of institutional due diligence before it gets up on that platform. So for our investors on our platform, they know that there's a bit of risk mitigation that's been done because we're doing that institutional work before it gets on the platform. Now, we have seen that the platform has slowed down a little bit in terms of how many dollars are going into deals. 2 years ago and a year and a half ago, we were averaging about $1 million per deal. Well, now we're probably averaging about 750,000 per deal. Now, I think there's a few factors for that, but I do think that if you look at the stats across the board, the individual accredited angel investor has definitely been a little bit slower and a little bit less active than years in the past. I think there's a few reasons for that. I think that, to your point, there is a cash conservation mode. I think a lot of those individuals have overextended themselves over the last several years and have invested too much into this asset class. And because of the liquidity crunch that we're seeing right now, they haven't gotten that money back. I think the other thing is a lot of those individuals, they're not your typical family office or institutional investor. And so they are more the traditional assets that are more liquid, that you have income potentially coming off of them. So now they've been in investments for 3 or so years, and they're wondering, where's my money? Well, you guys know this, the game that we play, it's a 5-year typical minimum, and really it's more like 7 before you get some money back in some of these deals. So I think it's a timing thing, it's an education thing, it's a let's get through this cycle. And some of these companies are going to have great returns for these individuals, and they're going to come back and they're going to be more active. But I do think a lot of the individual investors are sort of in this wait and see mode while liquidity comes back into the venture market, which we've seen this year. We've seen the IPO market open up a little bit more. It's been less technology companies. It's really been led by restaurant companies, which is fairly interesting. We see private equity really come alive here in the second half of the year. They have a lot of dollars sitting on the table. They're providing liquidity to venture into seed. And then also we're seeing that strategic acquisitions are becoming more popular because you have companies in the seed in the early stage area that have great technology, but maybe they're at a point where they can't raise any more dollars. So they're taking on strategic capital, or they're taking on strategic acquisitions so that larger companies can acquire or can buy technology to implement in with their businesses. So overall, it's been an interesting market. We've seen that if our returns are good, which they have been, investors are still active. And we've seen that the best deals are still going to get funded. And I think that that's always, the best deals and the best companies are always going to get funded. Over the last 10 years, before kind of the Florida boom, I would say that a lot of entrepreneurs were leaving Florida because they couldn't get investment. But you look at the best companies in Florida, they stayed here and they got investment. So I think that always rings true. The best companies with the best founders and the best business models are always going to be able to receive funding.
We've got about a minute left, and want to share out the information for Florida funders as well. So especially to those startups that are interested in connecting with you. So do you have a question you'd like to share?
I do. I just have to make a comment. So 5th episode, the very first person to wear a hat as being interviewed. I think you started a trend. I think we need some Sunshine Startup hats. But let's just call this a lightning
absolutely
round.
do.
Absolutely. We got to market ourselves, right? So here's a lightning round question for you. So in 30 seconds or less, if you think about the next 5 years in Florida, what's going to happen and where does Florida funders fit into that?
Yeah, I think that there's going to be the continued growth of amazing technology companies in the state of Florida. You're going to continue to see tier 1 venture funds move down to Florida. And you're going to continue to see Florida funders really be, in my opinion, the leader of the organic early stage investment firm here in the state of Florida. And we're going to continue to invest in what I believe are the best and brightest entrepreneurs in the state, in the Southeast, and around the country.
Anything that the state needs to do, we know that what the ingredients are, right, to make an ecosystem successful. What are some of the things that the state, you think, in your opinion, needs to do to increase or bolster the quality of the startups, the startup activity, maybe education, funding?
Yeah, I think the second to last word that you use is the biggest thing. I think that the universities and education need to continue to push technology as one of the big and major pillars of educating our young individuals to be able to be great technologists. You look at the growth of ecosystems like Silicon Valley, even like Pittsburgh, my hometown, with Carnegie Mellon. The reason that there's so many great companies in these areas is because of the talent that comes out of universities from a technical standpoint. So I think schools like the University of Florida, Florida State, University of Miami, FIU, FSU, all of these different schools, they all need to continue to push technology and innovation, and specifically push the development track in STEM.
Very good. And Saxon, so the startups, part of this podcast is, passing on some nuggets, exposing those that are helping foster the ecosystem. How do those startups reach Florida funders?
Yeah, absolutely. So we do a lot of events. So if you ever see something, we'd love to have anybody there. We do big events during Art Basel Week in Miami for startups. We do things throughout the year around education, both digital and in person. If you're looking for funding, all you need to do is go to floridafunders.com, apply for funding, upload a pitch deck, upload your financials, and then somebody from our deals team will reach out. That's the best way to get to us. We run a very institutional process, so that is the best way to get into the top of the funnel.
Saxon, thank you so much for joining us on Sunshine Startups Live. And thank you again for your time. And Saxon Baum, partner, Florida Funders. Thanks again.
Thank you.
Gentlemen, thank you so much. And I really appreciate what you're doing for the state. This is what it's all about. And if anybody has any questions for me, you can find me, Saxon at floridafunders.com. Thanks a bunch.
Thanks again.
Remember to subscribe, like, and share the Sunshine Startups Live podcast and follow us on social media. If you're interested in sponsoring or appearing on the show, please email us at booking@sunshinestartups.live.